Let's go over cost segregation. Earlier, we talked about straight line depreciation, which some people more knows about it, but a lot of people don't know about the benefit of cost segregation. So cost segregation, you can accelerate depreciation instead of doing annual little depreciation deduction year over year. You can do a cost segregation study, pay somebody to do it. It will cost you $1,000, $2,000, $3,000 or whatever, depending on the type of property you have. But the cost segregation allow you to take your building, take the structure of your property and break it down to a 5-year, 15-year, 10-year depreciation, accelerated depreciation, so you can get more deductions on a year-over-year basis instead of do the slow 27.5-year straight line to amortize against the building.
Mm-hmm.
Does that make sense?
That makes sense. Yeah, definitely.
Yeah. So
very good.
Yeah, segregation, cost segregation is anything that are not permanently attached to the structure. You can do a 15-year, 10-year, or 5-year depreciation, accelerated depreciation, and get much more tax benefit than you otherwise would get if you use a straight line 27.5 years on a for unit and 39-year straight line.
Right. Sense? Yeah. That makes sense. Yeah, that makes sense a lot.
Okay, again, the cost segregation, bonus depreciation, there are some tax rule. As you can see, in 2024, the IRS can only allow 60% deduction on the cost segregation, but there's a bill before the House and the Senate whereby they may revert back to 100% total depreciation on a cost segregation. So otherwise, if the Congress does not change the tax rule with respect to cost segregation, you can only deduct 60% of the bonus depreciation cost segregation this year.
Interesting.
And then next year, only 40%, following year, 2026, only 20%. And then 2027, no more cost segregation, no more bonus depreciation. Yeah.
Interesting.
Yeah, I believe when I talk to my licensed tax advisors from time to time, they believe they're gonna restore the 100% cost segregation.
Okay.
This year or the next year. And some investors, they can do a amended return to go back to the prior year and to redo the 100% depreciation. So they can capture more tax benefits from a prior year's tax return. So keep that in mind. Okay. Again, just to summarize, cost segregation, bonus depreciation, 3, 5, 7, 10-year depreciation, acceleration, the write-off, instead of straight line 27.5. Okay, again, we're using the same example. Okay, anyway. Any questions so far?
No, this is good information.
Again, since I'm not a licensed advisor, one might ask, if I do a cost segregation, if I get the 100% write-off and all that, what are, on this example of this fourplex, what are the net benefit? Okay, I'm using the scenario where here's my calculation. Again, it's just a approximation. It's not a precise cost segregation benefit. In this case, like it's 38,000. How I figured that out? Because this is the cost basis for 36K. You can 65% of the structure is permanent. You cannot do a cost segregation because they are attached to the property. Okay. 65% of the cost basis is 283. 283 divided by 27.5 years, you will still get the $8,000 for the long-term straight line. But the cost segregation portion is the 153,000. Okay, the 5, 7, 10 to 15 years based on this case study. Then so you can do a cost seg around $28,000.
Okay.
So that's a pretty good deal. Okay, so keep that in mind. Yeah, it's just a high level numbers. Okay, we went over this. Okay, by the way, so if you can get the $28,000 cost segregation instead of the $16,000 slow straight line 27.5 years, the bonus depreciation cost segregation allowance we just discussed give you double the passive losses, double the depreciation on you can deduct on the current year that you did the cost seg. So just do the math. Your gross rent 64,800 minus the cost segregation you just did equals, instead of almost $12,000 of passive loss, you can deduct against the active income. You can deduct $24,000.
Oh my goodness!
Passive losses.
Wow.
after the cost segregation study. So this one property, this one fourplex of 545K, even if you make less than 150,000, right? Under the previous rule we discussed, the active investor rule, you get up to $25,000 maximum depreciation
Okay.
per year if you make 100 grand or less. Simple. You can buy 5 rental property at 200 grand to achieve up to $25,000 depreciation for the current year. One fourplex income property. Okay.
Okay.
You got $24,000. So you max out the passive loss limitation just by buying one fourplex at 545K. So if you make 100 grand adjusted gross income reduced by this paper loss of 24,000, so your AGI subject to tax bracket, 100 grand minus 24 equal 75,000 or something like that. Instead of $100,000 subject to taxation, you have $75,000 of your adjusted gross income subject to taxation. So you reduce, you can have a tax refund or tax benefit of several $1,000s. That's tax savings. Not all of it, but a lot of it could be a down payment for your next income property.
There you go.
Like in Buffalo.
Good point. Very good point.
In the area that you bought.
That's it. Yeah.
Imagine that.
That's it. That's a very good point.